The silence in the IPO world is deafening. The number of companies that went public in January, 0. Hasn't happened since 2008. And compare that to just last year when nearly 24 companies went public, and those initial public offerings, IPOs, raised nearly $5 billion in just the first 2 months of last year. Let's talk about what's going on with tech with Venky Ganesan. He's with the VC firm Menlo Ventures, early backers of Uber and Tumblr. Welcome to Power Lunch.
Nice to be here.
Is it as simple as the fact that there's just been tremendous volatility, and volatility usually means a bad market, and hence why would you want to go public in this kind of environment, or is there more to it than that?
Well, I think volatility and the macro conditions are a factor, but I think that when you think through the end of the year, I do think companies will have to go public, and companies will go public. The long-term opportunity in venture capital and for venture capital-backed startups has never been better.
Why do you say that right now when it feels like everything is moving against it, that investor sentiment is so negative that it's risk off, that we, even in the private sector, in the private traded market, that the valuations are coming down?
Come on, it's a beautiful day in February. Love is in the air. Spring is not too far away. You have to look past the immediate and see the future. That's what they pay us. At Menlo Ventures, we've been doing venture capital for 42 years. And one of the things we know is there are up cycles and down cycles. But you look at the core trends that's driving disruption, the mobile, cloud, internet, those things are intact. Yeah, we're a little bit of an inflection point here where some of the late-stage guys have gotten too much too far ahead. But the early-stage venture capital remains very much intact.
Did you see this Facebook post by Tim Draper, a legendary Silicon Valley VC guy? And he says, why would any company want to go public today? It doesn't make any sense. It costs a company as much as $5 million a year to comply with regulations now. I mean, that sounds incredibly expensive for a startup. I mean, why would you want to blow $5 million?
When you talk to CEOs who have gone public and you ask them, would you do it again? Most of the ones I talk to say no. They would much rather go back to the way it was when they were public. Not that they don't like having the money. Believe me, they love having the cash, but they don't love the other parts of it.
You know, we see this periodically. I call it the Peter Pan syndrome. You know, people don't want to grow up. Going public is about growing up. If you want to create a sustainable long-term company, you got to go out and deal with the transparency and the openness that the IPO market involves. And to me, that's important. That's an important part of growing up. I think, like parents, we've been doing a lot of helicopter parenting. I think investors are doing a lot of helicopter investing. And part of life is to let your kids go up and grow into the real world. And sure, there'll be some ups and downs, but in the long run, they'll be better for it.
Venky, you're one optimistic guy out there in Silicon Valley. I mean, you take a look, I mean, I'm wondering, because Twitter, for instance, is probably the poster child of perhaps the company that maybe should not have gone public. It's down, what, 66% in the past 12 months? That's got to have an impact to valuations and fundraising that you're seeing.
Well, just for the record, if you were to see me in 2014 and 2015, we have been predicting this late-stage pullback. But I'm a big believer that it's darkest before dawn. So I'll go through the fundamentals, and I'm actually excited. I'm excited about what's going on.
Wait, so does that mean that it's dark now?
Well, it is dark from a public market standpoint, from a macro standpoint, but it's exciting from an innovation standpoint.
Well, Venky, we look on Twitter and GoPro and Etsy and some of these other ones that have not done well. Are they bringing everybody else down? When you see these very high-profile IPOs that don't do well, what is the ripple effect through the rest of the funding market? Series A, there's got to be an impact.
There's absolute impact in late stage. So I think every late-stage investor is looking at those valuations, and then there's a repricing going on for late-stage unicorns. But when you are two guys or two gals in a garage trying to think about the next great company, the next Uber, there's no implication to what the stock market is doing today or what the public markets are doing. What you want to look at is what is the real disruption you're doing, and that's really what we focus on. We are early-stage investors, and when we look at the opportunities coming down the pike, it's a pretty exciting time for us.
Give us an example. What are you putting money in? How much?
So I recently put money in a company called Up Counsel, which is, think of it as Uber for lawyers. Very exciting company that's actually taking advantage of what's going on in the legal field and allowing you to hire the best lawyers you can at a dramatically lower price. So that's a great example of a service that's available today.
Put it in your phone app, and a lawyer shows up at your door within 8 minutes.
Well, or we have invested in a company called Realty Shares, which does crowdfunding for real estate and gives investors out there an option for a much better investment than, say, the public market where you can invest in real estate. We look across our portfolio. We look at the revenues that are growing. We look at the companies that are continuing to make progress. And that's interesting for us. Is there a pullback in the late-stage market? Absolutely. But that's also opportunity.
You mentioned Uber for lawyers. What do you think Uber itself is worth right now?
Look, as we invested in the company in the Series B when they're doing less than $1 million a month. They're doing a little bit more than that. And what I can tell you, from our perspective, we think this company is going to be a game changer. Every decade, there's one company that truly changes the landscape. Uber is one of them.
What are some of the companies that you're investing in that will disrupt ones that are publicly traded and may exist in viewers' portfolios out there? What should we be concerned about right now?
Yeah, so we are investors in a robo-advisor called Betterment. And if you look at what Betterment is doing to fees and to financial asset management companies, it's incredible. They are crushing down the fees. They're able to create a portfolio for you at 15 basis points, where a Fidelity, a Vanguard, any other mutual fund is doing it at 80 to 90 basis points. That, we think, is a game changer when we look at the impact that companies have.
Rewind the tape.
We look at the
I'm sorry. Finish your thought, please, Venky. I'm sorry.
No, go ahead. Go ahead.
I was going to ask you, our producer just suggested we go back and rewind the tape to the year 2000, where a lot of high-flying internet tech companies, not just internet companies, saw their public market values shaved by 60, 70, 80, 90% or more. Do you see any similarities to today? Beyond that?
In the 2000 bubble, it happened in the public markets. These companies went public too early. You had companies like Pets.com going public and actually having the retail investor bear the price. This time, all the investing is happening in the late stage with sophisticated investors. So to the extent that it doesn't work out, there's not going to be an impact on the retail investor. That's one. Second, and which is the most important thing, the companies here are companies. Even if they are overpriced, they are real companies. This was not the case in 2000. So to me, this is not 2000. I know history doesn't repeat, it rhymes. And so I think we have a tendency to go back to the past. This is not quite exactly that. It rhymes, but it doesn't repeat.
Venky, you remind me today of having the optimism of a real estate agent. Always a good time to be in real estate, right? Well, we appreciate your optimism from sunny San Francisco today. It's good to have you on.
Thank you. Thanks for having me.